Hey, good afternoon, everyone. Thanks so much for joining us for today's webinar, the 2025 Mid-Year Momentum for Payroll, HR, and Tax. We have an awesome session for you today, led by Grace, who will be introducing herself in a moment. But just to give a bit of context into today's call, we're going to be grounding our discussion in what we've seen so far for 2025 as states continue to push more nuanced compliance requirements, federal labor enforcement's tightening up, and employees are increasingly expecting transparency and flexibility. And leaders are responding by reassessing everything from benefit offerings to payroll technology. Pardon me. So today is going to be focused on those themes as we go along. So really excited to chat with you. Just for some quick introductions, I'm Alana Gravely. I'm an account executive here on our sales team. I've spent the last terrifyingly, it's coming up on probably 13 years in SaaS sales, and payroll is really near and dear to my heart because I came from the staffing world where it was a common theme, people needing to get paid, and it needs to be on time and done right. So that's a bit into my background, and I'll pass you over to Grace, our speaker for today.
Thank you so much, Alana. Hi, my name is Grace. I have about 7 years in the industry, and I am currently on the strategic account management team here at Greenshades. So we're really excited to be getting into this webinar with everyone today. Okay, so state shifts. We're going to be talking about tax rates, sick leave, and compliance across all 50 states. Okay, so state income tax trends. Nearly every state made some kind of tax adjustment this year. Some made changes to payroll taxes, while others made adjustments to corporate taxes, taxes on retirement, and other items that could affect the individual or the business taxpayer. States that lowered income tax include Indiana, Iowa, Louisiana, Mississippi, Missouri, Nebraska, New Mexico, North Carolina, and West Virginia, but that's not even all of them. Those are just a few amongst others.
I'm just glad Pennsylvania didn't make any huge changes.
Me too. Employers have to update withholding calculations and also, in some cases, distribute new forms. Other changes include Alabama, which ended its exemption on overtime. It will end on June 30th. Vermont started a mandatory retirement system, and the employee must now opt out. This wave of reform really does increase the net pay in many states, but it also creates complexity for payroll, especially in those multi-state organizations. We're also going to share additional details and further state-by-state changes in our webinar recap when this concludes.
So here's one of those questions I promised to ask you. We're really interested to understand how many states everyone's operating in. Obviously, the more states you're dealing with, the more complex things get. So quick poll for everyone. Tell us how many states you're operating in. Give a few seconds, okay? We've got some single states, some in the 5-ish range. Oh, we've got quite a few of you. It looks like you're operating in 5+ states. So I'm sure you feel the pain of the complexity that grows with each state that you're operating in, especially as they continue to pick up the pace on all these changes. So again, we're going to continue through on how you can, get ahead of some of those changes and make sure that you're staying compliant along the way. And as Grace just mentioned, we will be following up with this with a lot more context for some of these changes that are going on. We just didn't have the time to address everything today.
Absolutely. Thank you for that, Alana. So HR compliance, we'll just get right into that. So in January, the DOL, or the Department of Labor, issued an opinion letter. The key takeaway: if an employee is receiving state family leave pay while on federal FMLA, the employer cannot force them to also use accrued PTO. That time is considered paid. So FMLA does not qualify as unpaid leave in that case. State level compliance is also evolving very rapidly. Connecticut overhauled its paid sick leave law effective January 1st, expanding employer coverage and reasons for use, and also eliminating exemptions. Michigan's Earned Sick Time Act changed in February, now includes nearly all employers with new accrual and cap rules. Alaska and Missouri will implement their own paid sick leave laws later in 2025. So that's going to be later on in the year. Meanwhile, Delaware, Maine, and Maryland began collecting payroll contributions for paid family and medical leave this year. Maryland's is planning to go into effect on July 1st, 2025. Employers operating in multiple states must track differences in accrual, usage, carryover, documentation, and notice requirements. Okay, moving right on here into capital considerations. Federal shifts reshaping payroll, HR, and tax. Okay, so payroll spotlight, wage rules, and withholding updates. So federal contractor minimum wage reverted from $17.75 per hour back down to $13.30 per hour. Employers with contractors should audit which wage level applies, especially who are those in their mid-contract. The Social Security wage base rose up to $167,100 this year. If your system was not updated, you are under withholding. It is estimated to be about $181,800 for 2026. Federal income tax brackets shifted up with inflation. The standard deduction is now $15,000 single or $30,000 married. This affects employee net pay.
Can't underscore this one enough too, just to make sure that you have really taken a look at all these changes that have taken place so that you make sure you are having the correct withholding. Sorry to cut you off there, Grace.
No worries. Thank you so much for that. But the FUTA surtaxes. So California and New York employers owed an extra 0.9% for 2024 filings. Those issues are definitely not going away. So monitor your state's unemployment trust fund statuses. Okay, benefits and deduction limits. What is new in 2025? Okay, so payroll teams, what you need to know. Retirement and FSA limits increased this year. So the 401k deferral limit, it's now $23,500. Employees aged 60 to 63 get a special catch-up, if you will, of $11,250. That makes a total of $34,750 for those individuals. Health FSAs now cap at $3,300, and the commuter benefits also went up to $325 per month. These updates support employee savings and wellness, but system and communication must reflect them accurately. ACA changes. So new rules for employers. There are going to be some big changes this year under the ACA compliance. You are no longer required to mail 1095Cs, as long as you provide employees with notice that a copy is available upon request. Then you don't need to distribute to all the new employees. You can now use date of birth instead of a social in Part 3 of the 1095C as well. This is a huge administrative relief when TINs are hard enough to collect. If you receive a 226J penalty letter, you now also have 90 days to respond when you once had 30. And importantly, there's now a 6-year limit on the Employer Reporting Improvement Act, or ERIA. It has established.
Grace and I thought it was important to throw in some like happy changes that are happening, as well as some of the others that we've been discussing.
Yeah, it's nice to see a positive one. But so this is effective for returns due after December 30th, 2024. This period begins on the later of the due date for the specific form filing or the actual filing date. Okay, federal shifts, a new compliance landscape. So the 2025 election year brought leadership changes that are starting to ripple through regulatory enforcement. NLRB, or the National Labor Relations Board, is expected to pull back on some employee-friendly rulings. Meanwhile, immigration and I-9 audits are ramping up again, especially in states like Florida with e-verify mandates. Even if nothing new is passed, definitely expect a tone shift from federal agencies, more employer aligned in some areas and maybe more enforcement focused in others.
All right, another poll question for everyone. It might seem like an obvious one, but you'd be surprised. I've had conversations on both sides of the board. So I am interested to know, um, is compliance top of mind for everyone? Where are you at in that conversation? Is it something that, maybe isn't a huge concern in your role or that you've heard around the water cooler? So I'm interested to hear everyone. Is your company concerned with keeping up with changes in the compliance landscape? Um, Further to that, I guess something I can follow up with, but how are you planning to combat that? So I'm saying, oh my goodness.
Oh, wow.
I'm seeing a resounding yes. We have 100% yes on that. Awesome. So obviously everybody is thinking about this. It's something that, needs to be addressed immediately. Very interested to hear further on that, maybe after this call, how people are addressing this. Thanks for that.
Yeah, thank you. Okay, getting right back on track here. So, evolving expectations, the trends defining work, culture, and compensation. Okay, so employees expect more. Hiring and retaining talent remains to be a top challenge in 2025. Compensation alone is not enough. Successful retention strategies in 2025 center around addressing key employee priorities like growth opportunities, competitive compensation, workplace flexibility, and also a holistic well being. This has made hybrid models, adjusted scheduling, and mental health resources central to those retention strategies. That rolls us right into creating culture, ideas that aren't essentially new, but now even more important in 2025. The conversation around workplace culture often centers on things like perks, programs, or one time efforts. But what truly shapes culture is how consistently those values are communicated and lived out. Empathy, emotional intelligence, flexibility, and recognition are not new ideas. But what is changing is how employees expect them to show up through leadership behavior, through day to day operations, and through honest communication. Employees do not thrive just because there's a policy or a program in place. They thrive when they feel seen, understood, and supported. Culture isn't what you write down, it's what gets reinforced. And when care becomes a core part of how work happens, outcomes like retention, high performance, and morale tend to take care of themselves. Okay, so what is ahead? The emerging trends to track in H2 2025. As we look towards the second half of the year, several key themes are taking shape that could significantly impact how HR, payroll, and compliance leaders operate. First, compliance enforcement is tightening under the current administration. We're seeing increased audit activity and renewed focus on wage and hour enforcement, paid leave compliance, and ACA documentation. If you haven't already, now's the time to take a closer look at your policies and documentation processes. Second, AI and HR tech are undergoing regulatory scrutiny. With so many systems now using automation in decision making, especially around hiring, compensation, and scheduling, watch for state or federal requirements around algorithmic transparency and fairness. Finally, return to office or RTO policies are once again shifting. Some companies are reversing flexible arrangements, while others are formalizing hybrid policies. Regardless of your stance, these changes affect payroll, tax withholding, and employee engagement. It's absolutely worth reevaluating how your current system supports location based compliance and how your culture adapts to shifting expectations. I would absolutely use this time proactively to evaluate how well your team is set up to respond rather than react to these larger shifts. So, keeping the momentum, what is the action plan for H2 2025? Okay, HR and payroll alignment. the action plan for H2 2025. Now, I understand that we've covered a lot, but the second half of 2025 is your chance to clean up and even get ahead. These updates aren't just regulatory, they are an opportunity to deliver a better employee experience and protect your book of business from risk. Okay, Greenshades, helping you keep pace. As you think through your next steps for the second half of 2025, Greenshades is built to support this kind of agility. Whether you're navigating new compliance rules or managing employees in multiple states, our platform adapts with you, never against you. You get real-time insights, automated tax updates, and flexibility to handle complex compensation, benefits, and workforce setups. And when something changes, we're already on it. So your team is not going to be left scrambling.
Yeah, if you're Sorry, just to jump in here for a second too. I know I promised at the beginning not to make this super salesy, so my apologies, everyone. But just to give a bit of background into Greenshades, in case you're not familiar with us, we found our roots over 20 years ago in tax and compliance. This is what we do every day. It's been our bread and butter for decades. So we are at the forefront of any and every change that is happening, and we help you automate all of those changes so that you don't have to worry about it. It's just taken care of for you within the platform.
Absolutely. Thank you so much. And with that being said, if you're looking for a way to turn mid-year momentum into mid-year long-term success, we're here to support that journey.
All right, our last poll question for everyone. Very curious to know, I've spoken with a lot of folks who, as things are changing and as things are getting a lot more manual with their current systems, they're looking to evaluate new payroll systems. We'd love to hear from you if this is on your mind, if you're planning to evaluate, in the next little while. So if you would all entertain me in letting me know when you or if you are planning to evaluate payroll. Kind of a mixed bag here. It looks like we've got some folks that aren't planning anytime soon. A lot of folks probably looking in the next year or so, and a couple, maybe it's really hot on your minds. Interesting. Mixed bag. Thanks so much.
Awesome. Okay, well, thank you so much for joining us on this webinar today.
Yeah, thanks everyone. Hopefully it was more educational than scary. I know there's a lot going on, but we really hope you glean some insights in how you can address all these changes that have happened so far so you can really kick it into high gear for the rest of H2.
Oh, yes, absolutely. And of course, as always, if you have questions or would like to see a personalized demo, please feel free to contact us. We will get you in the right contact immediately.
Thanks, everyone. Enjoy the
Thank
rest of your
you.